But if you do have a major deflationary collapse or bust, like we had in the 1930s, what we're going to see is bankruptcies everywhere. Not just, I think governments will go bankrupt, corporations, individuals, local governments, banks will go bankrupt. So, and if you hold cash in these banks or brokers or institutions, you're going to lose everything. So, physical gold outside the system is going to go unobtainium.
The U.S. appears to be on the verge of the most significant market bubble in history, and when it bursts, likely after a blow-off top, we could face a massive deflationary collapse. The last significant deflationary period in the United States occurred during the 1930s when the Consumer Price Index and GDP deflator dropped by 24% between 1929 and 1933. In a bold and electrifying statement reverberating through the financial world, Elon Musk, the visionary billionaire behind Tesla, SpaceX, and Twitter, has warned that the U.S. is headed toward a severe economic catastrophe that could quickly lead to bankruptcy. Mario Innecco agrees that a collapse is possible. Still, he strongly warns against abandoning real money, such as gold, during such a crisis, as doing so could result in complete financial ruin. Reflecting on the 1930s, he points out that those who held gold during that period saw significant gains as demand for gold surged amid bank failures and widespread economic instability. The U.S. teeters on the edge of an economic collapse as rising interest rates, persistent inflation, and the erosion of the dollar's purchasing power weigh heavily on the economy. Inflation remains the dominant risk factor for 2025, a reality no informed investor can ignore. After peaking at a 40-year high of 9.1% in June 2022, year-over-year Consumer Price Index (CPI) inflation has moderated, dropping to 2.6% by October 2024. However, the economic challenges persist, signaling turbulent times ahead. Gold has historically served as a strong hedge against inflation, as it tends to retain or even increase in value when the purchasing power of a currency declines. Mario believes that during a major deflationary collapse, the risk of counterparty failure is a significant threat, and having gold, something with no counterparty risk, is crucial. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
What would happen in a major deflationary collapse and bust? And I agree with him. This is the mother of all bubbles, and it could go into a crack boom. Um, but if you do have a major deflationary collapse or bust, like we had in the 1930s, what we're going to see is bankruptcies everywhere. Not just, I think governments will go bankrupt, corporations, individuals, local governments, banks will go bankrupt. So, and if you hold cash in these banks or brokers or institutions, you're going to lose everything. So, physical gold outside the system is going to go unobtainium. So that's how why I dis where I dif differ with him. I agree there could be a bust and a collapse, but you don't want to give up real money just when that's happening. You're going to be wiped out. That's the way I see it. And yes, the price on COMEX or paper gold might go down to 1,500, and when the Dow is down to 5,000, even that though is good. But what I think is the counterparty risk. That's gonna that's gonna destroy people's finances completely, and that's what happened in the 30s. And if you had gold in the 30s, you'd be laughing. And even during the 30s, home stake mining, I'm sure you know about this, went up like 500%. And the more things got worse, the more people wanted gold. And actually, the gold price was trading in Europe even after FDR banned gold ownership. The dollar started going down versus gold even before the revaluation in 1934 because people wanted gold. I read as well in Benjamin Roth's diary that in Australia there was a gold boom because people couldn't get cash from the bank because all the banks were failing. So that's I don't agree with that. I think it's a big mistake, and he might be right in the short term. Maybe when everything starts collapsing, gold will correct a bit. But it's the biggest risk, I think, is getting rid of, yeah, something that has no counterparty risk, and you don't want to have counterparty risk in the biggest deflationary bust ever, because I agree with him uh, that this is the biggest everything bubble ever.
The gold market is likely to remain under solid buying pressure during price dips, as it has been in a sustained uptrend for quite some time. This market continues to account for various influencing factors, with geopolitics playing a significant role. According to the World Gold Council, central bank demand is a key driver of rising gold prices, contributing to valuation gains. Central banks increasingly prioritize asset security, particularly in the face of ongoing global political uncertainties. According to Mario Innecco, central banks globally are increasingly acknowledging the flaws in the current reserve currency system, particularly noting that the US dollar is uniquely a debt-based reserve currency. He emphasizes that this system lacks the stability of a proper monetary framework, where assets like gold serve as an actual store of value. Mario references a remark by a central banker from the Netherlands, who described gold as the ultimate safe asset during times of crisis, underscoring its unparalleled role in preserving wealth when other systems fail. Now, let's redirect our attention to a video.
Yeah, I mean, market-wise, one of the things I'm really looking at right now is the bond market. And I know the bond market is a market that's not really followed too much by the general public, but I think is the most important market because it determines the price of credit or money, if you want to call it. And ever since the Fed cut rates unexpectedly, really, not that they cut, but the amount that they cut back on September 18th by 50 basis points, the 10-year yield has gone up from 3.6 to around almost 4.5 right now as we speak. And that usually doesn't happen. So, it says to me that the bond market and a lot of people think the bond markets are like the smart money. They're saying that the Fed made a mistake. So I'm looking at that because if that 10-year yield continues to creep up, would it hurt gold? Because some people think that a higher real rate on treasuries would hurt gold. I don't think so because that relationship has kind of been broken. And with that, I'll jump to the next reason. Next theme, I think, is one of the reasons why this relationship has been broken is central bank buying. Not just from Asia and emerging markets. Now we're seeing like in Eastern Europe, Poland, I think, is the biggest buyer of gold this year in the world, the Polish central bank. And I think that's going to continue because the world sees that the reserve currency that we have, which is actually historically, it's the only reserve currency that is debt-based, which means you never get paid as a country if you have U.S. Treasuries and you go to the U.S. Treasury, let's say as Poland and you ask for payment, they can't pay you. They just say, "Well, buy some more treasuries." That's how they pay you. When there's a proper monetary system, you go to the treasury and you get payment in gold. So I think the world sees that. We saw, I think, a year or so ago. I don't know if you remember, one of the central bankers from the Netherlands said that gold is the ultimate asset that is safe when everything goes wrong. So I think that's what the rest of the world is realizing, except ourselves in the West in general, that yeah, the dollar is not fit for purpose, and that's why it's going to keep driving gold demand. So those are two of the things I'm focusing on. One, of course, the interest rates and yields are more short term. I think the gold idea fundamentals are going to keep going. I think that's not going to stop the record gold buying.
The international economy is facing significant challenges, from supply chain disruptions to geopolitical tensions. These factors increase volatility in the stock market and other investment options, making traditional investments riskier. Gold, on the other hand, is considered a safe haven asset that tends to retain its value when other assets are underperforming. Why now is a good time to invest in gold? Please drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.